Microsoft shares are down approximately 30% year to date. And now you got analysts coming out and saying that, guys, these shares probably shouldn't be down this much because a lot of the company's offerings are mission critical. So if Microsoft shares go down even further, you're thinking about a potential opportunity for a very mission critical type company. Nobody's getting rid of their Office subscription anytime soon, especially if it's a mild recession. So that's what I'm going to cover in this video. But first, let me run the intro. What's up, guys, and welcome back to the channel, and let's dive right into this one. So you can see here that year to date, Microsoft is down approximately 30%, and this is kind of crazy because I believe that Microsoft's offerings are very mission critical to organizations, and that's not just me saying it. Raymond James analyst Andrew Maroc has said that the company has a collection of sustainable competitive advantages. In addition to that, Maroc believes that the firm's investments in cloud technology will bring broader benefits in its other products like its customer relation management, security, gaming, and advertising segments. And one thing that he's pointed out, which I think is very interesting, is that Microsoft has been able to invest at a scale that most other competitors in these markets cannot match. And the one point that I will want to make there is that when they announced their Activision acquisition, I walked you guys through their balance sheet and told you that they could probably buy it twice. But the other thing is their free cash flow is so large that the time it takes for this transaction to close, their free cash flow would have probably generated the purchase price that's required to buy all of Activision. So that's how much of a cash cow Microsoft actually is. And you can see from here that Maroc believes that the company is somewhat insulated. And the reason why is because Microsoft can be seen as a relatively safe company as it has mission critical products to enterprises. And so this is what he's saying. He's saying while deep economic troubles would affect its prospects, and I think he's referring to growth prospects, shallower macroeconomic disruptions are not likely to materially alter the company's trajectory. So yeah, he is talking about growth prospects here. And so for a lot of you, you guys might be familiar with a couple of products for Microsoft, but you may not necessarily be familiar with the segments. Well, I got you guys here because I actually built out a model on Microsoft where I broke out all of their segments, and then I forecasted those segments out individually on a year-over-year growth level. But before I even show you my model, I want to just quickly explain to you what those segments are. So you can see here that this is the first of the three segments that they have. This is their productivity segment. So here's where you have commercial office products. You also have some consumer office products, so like the 365 type products. So those are like off-site type products, like cloud type products. They have LinkedIn in this segment. That was an acquisition that they made many years ago. And also they have their Microsoft Dynamics suite in here as well as like the Power apps like Power BI and stuff. You'd be familiar to that if you worked in finance in industry. The second segment is, of course, their intelligent cloud. Now, you would be most familiar with Microsoft Azure, the #2 cloud-based platform in the world. And then finally, their third segment is the segment that you're probably most familiar with. This is where Windows sits, so the one product that got them as much fame as they currently have. But in this segment, they also have their devices. So, you know, the Surface. I definitely own a Surface. They have gaming. So Xbox, Activision will fall into this segment once that transaction closes. And then some of you might not remember, but they also have their search and news advertising here. And so when you think of search, think of Bing. Yes, I know. So many of you guys use Google that you forget that Bing is a thing, and it does generate revenue. And so let's go into the segment results for Microsoft. So you can see the three segments that we just discussed over on the left. So productivity, cloud, and personal computing. Notice that revenue has been growing at a double-digit clip for the past 6 years. And the cloud business, subsequent to 2018, is really starting to pick up steam. So you can see in 2018, it grew around 18%. And then in 2022, it grew 25%. So that's really stoking the flame for the revenue growth rates at Microsoft, and that's what I expect to see going forward. And so speaking of going forward, here's my forecast. Overall, I see revenue growing in the low double digits over the next 10 years, but they're led by secular tailwinds in cloud computing, aided by growth in productivity. And there's also upside in the personal computing and gaming space, albeit the personal computing space might be slow in the near term, but I do see a pathway to further growth in that segment as well. So you can see in productivity and business processes, I'm growing revenues at approximately 12.5% until 2028, so the next 5 years, and then bringing it down to 5%. With cloud, I'm actually growing that segment at 20% for the next 5 years and then bringing it down to 15 subsequent to that. So that actually might be on the low end, and you can have a lot of upside there, especially if Azure continues to take off and you start seeing 30-40% year-over-year growth rates, at least in the near term. And then, of course, with the personal computing segment, has been hit a little bit, plus it's their legacy segment, and so I'm growing it at around 5% a year, which is half the rate of what they've been growing at recently. So you can see some upside to the valuation here as well. But of course, overall, you're seeing over the next 5 years, I'm growing revenues at approximately 13%, and then subsequent to that, I'm growing revenues at around 10%, led almost exclusively by the huge growth in the cloud business. Now, I do want to show you guys the valuation that I have for Microsoft, but first, before we get into that, please note that approximately 80% of the watch time on this channel is from people that are not subscribed, so please, if you have an opportunity, consider subscribing to the channel. And let's dive right into the valuation so you can see that using a 22.5 times terminal multiple, which may be on the low end, to be honest, I'm valuing the company at around $316 per share. Compare that to their current share price of $232 per share. You're looking at a share price as a percentage of intrinsic value of approximately 75%. Note that just a couple of months ago, we were looking at 100%. So that's how much Microsoft shares have come down. I'm still waiting for this opportunity to come even lower, but I will consider buying it. But the one thing that I do want to point out is sometimes great companies don't come down to 50% of their intrinsic value, especially in situations where I've been so conservative in the revenue growth estimates. So this might be one of those situations where you might want to buy these shares if they get closer around 60% of their intrinsic value, even currently where they're at, because long term, buying the company at 75% of their intrinsic value where they're at today may actually be a good purchase, because there might be so many upside surprises considering that there's been so much conservatism built into this valuation model. Now, the question is, how do you get access to that model and all the other models that the Patreons get access to? Well, you can get access to that model and all the other models that the Patreons get access to at the lower tier of the Patreon. And if you want to join us for an epic live presentation, you can join us at the higher tier. Now, Microsoft is not the only great company whose shares have started to decline and starting to be cheap. I actually recently put a video out on Google, or Alphabet, which is another fantastic company whose shares are trading at approximately half of what I believe they're worth. And if you want to get access to that video, well, it's right here.